Kamala Harris, but again, pulling on, again, community members, and you get a good feel of a city, a state, a town, and really the people that make up that community, and also what is front and center for them.
That's right, and especially as we know, we talk so much about inflation, consumer prices, especially with the reports earlier this week that still showed inflation was contained, but still it's one of those conundrums, as you know, Carol, when you do have prices that appear to be ebbing, but when you're going to the grocery store, there's different dynamics that happen there, and especially when you're thinking about different grocery prices. So she is supposed to speak on different items on that agenda as well.
Yeah, and it's interesting, you know, we did talk with our Josh Wingrove earlier this week, who put out a story about what Kamala Harris would mean for the U.S. economy, what it means for U.S. businesses. And while her economic agenda has been taking shape, you know, we are expecting her to focus on those kitchen table issues and not necessarily some big sweeping changes, not much difference potentially from what we have heard from Joe Biden over the last 3 years. Nothing sweeping in terms of regulatory proposals, but really what matters to individuals when it is to putting food on the table,
That's
you
right.
know, making sure they have a roof over the head of their families. So that is what's really, really interesting.
And we were just talking about the cost of housing in our prior segment here. So something else that she's supposed to talk about is the tens of billions of federal dollars that could be spent to improve the supply of federal housing, Carol.
All right, we're hearing some cheering. And as we said, we've been listening to Mike De Los Santos, owner of Mike D's Barbecue, on the stage, getting ready to introduce the vice president. Some cheering as she is making her way into the area. Again, a big crowd there, but like we said, it's off and running. We're under, what, 80, 90 days here until voting, although voting can begin for the campaign and for the election in September. Let's take you to Raleigh, North Carolina, folks, as you hear the crowds and Vice President Kamala Harris.
Hello, family and friends. Oh, it's good to be back in North Carolina. Oh, it's good to see everyone. Thank you. Oh, it's good to see everyone. Good afternoon, everyone. Please have a seat if you have a seat. Please have a seat. Mike D, so Mike D's Barbecue, let me tell you one of the biggest fans of Mike D's Barbecue. My husband, Doug M. And thank you, Mike, for sharing your story. And I'm just so sorry for what your family has been through, but you have, out of an incredible tragedy, done so much for the community, and you are such a role model. So thank you, Mike, for everything you do. Thank you. And good afternoon to everyone here. Thank you to all of the incredible leaders with us today, including my friend, the Governor, Roy Cooper. Where is he? Here with his daughter. Every time I land in North Carolina, I'm just literally coming down the stairs of Air Force Two, I will shout to Roy Cooper, "What number is it, Roy?" And today he shouted 16, which is the number of times I've been in this beautiful state since I've been vice president. Every time. I want to thank your next governor, Attorney General Josh Stein. He's doing incredible work. He's going to be an extraordinary governor. Representatives Adam, Manning, Foushee, and Nickel, thank you all for your support, for your friendship, for your leadership. Chair Thomas of the Wake County Board of Commissioners, thank you for all that you do. And to all the leaders that are here today, including the students and instructors here at Wake Tech North. Thank you. Thank you. So thank you all. So listen, this election, I do strongly believe, is about two very different visions for our nation. One, ours, focused on the future, and the other focused on the past. We see that contrast clearly in many ways, including when it comes to how we think about the economy. So our country has come a long way since President Biden and I took office. At that time, we sadly remember the millions of Americans that were out of work. We were facing one of the worst economic crises in modern history. And today, by virtually every measure, our economy is the strongest in the world. We have created 16 million new jobs. We've made historic investments in infrastructure, in chips manufacturing, in clean energy. And new numbers this week alone show that inflation is down under 3%. And as President of the United States, it will be my intention to build on the foundation of this progress. Still, we know that many Americans don't yet feel that progress in their daily lives. Costs are still too high. And on a deeper level, for too many people, no matter how much they work, it feels so hard to just be able to get ahead. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance to succeed. Everyone, regardless of who they are or where they start, has an opportunity to build wealth for themselves and their children. And where we remove the barriers to opportunity so anyone who wants to start a business or advance their career can access the tools and the resources that are necessary to do so. I will focus on cutting needless bureaucracy and unnecessary regulatory red tape and encouraging innovative technologies while protecting consumers and creating a stable business environment with consistent and transparent rules of the road. As president, I will bring together labor with small businesses and major companies to invest in America, to create good jobs, achieve broad-based growth, and ensure that America continues to define the future and lead the world. And key to creating this opportunity economy is building up our middle class. It is essential. The middle class is one of America's greatest strengths. And to protect it then, we must defend basic principles, such as your salary should be enough to provide you and your family with a good quality of life. Such as no child should have to grow up in poverty. Such as after years of hard work, you should be able to retire with dignity. And you should be able to join a union if you choose. Building up the middle class will be a defining goal of my presidency, because I strongly believe when the middle class is strong, America is strong. So in the weeks to come, I will address in greater detail my plans to build an opportunity economy. And today, I will focus on one element that's on the minds of many Americans as they pay their bills at the kitchen table or walk the aisles of a grocery store. and that is lowering the cost of living. So every day across our nation, families talk about their plans for the future, their ambitions, their aspirations for themselves, for their children. And they talk about how they're going to be able to actually achieve them financially. Because look, the bills add up. Food, rent, gas, back to school clothes, prescription medication. After all that, for many families, there's not much left at the end of the month. I grew up in a middle-class household. For most of my childhood, we were renters. My mother saved for well over a decade to buy a home. I was a teenager when that day finally came, and I can remember so well how excited she was. I kind of understood what it meant, but we called her Mommy. Mommy was so excited, it just made us excited that she was so excited. Later in college, I worked at McDonald's to earn spending money. Well, some of the people I worked with were raising families on that paycheck. They worked second or even third jobs to pay rent and buy food. That only gets harder when the cost of living goes up. When I am elected president, I will make it a top priority to bring down costs and increase economic security for all Americans. As president, I will take on the high costs that matter most to most Americans, like the cost of food. We all know that prices went up during the pandemic when the supply chains shut down and failed. But our supply chains have now improved, and prices are still too high. A loaf of bread costs 50% more today than it did before the pandemic. Ground beef is up almost 50%. Many of the big food companies are seeing their highest profits in 2 decades. And while many grocery chains pass along these savings, others still aren't. Look, I know most businesses are creating jobs, contributing to our economy, and playing by the rules. But some are not, and that's just not right. And we need to take action when that is the case. As Attorney General in California, I went after companies that illegally increased prices, including wholesalers that inflated the price of prescription medication, and companies that conspired with competitors to keep prices of electronics high. I won more than $1 billion for consumers. So believe me, as president, I will go after the bad actors. And I will work to pass the first ever federal ban on price gauging on food. My plan will include new penalties for opportunistic companies that exploit crises and break the rules, and we will support smaller food businesses that are trying to play by the rules and get ahead. We will help the food industry become more competitive because I believe competition is the lifeblood of our economy. More competition means lower prices for you and your families. Now compare what Donald Trump plans to do. He wants to impose what is, in effect, a national sales tax on everyday products and basic necessities that we import from other countries. That will devastate Americans. It will mean higher prices on just about every one of your daily needs. A Trump tax on gas, a Trump tax on food, a Trump tax on clothing, a Trump tax on over-the-counter medication. And you know, economists have done the math. Donald Trump's plan would cost a typical family $3,900 a year. At this moment, when everyday prices are too high, he will make them even higher. As president, I'll take on the issue of the cost of health care. As Attorney General, I took on insurance companies and Big Pharma and got them to lower their prices. And together with President Biden, we've gone even further. We capped the price of insulin at $35 a month, and the total cost of prescription drugs at $2,000 a year for seniors. We let Medicare negotiate lower drug prices for seniors. And just yesterday, we announced that we are lowering the price by up to 80% for 10 more life-saving drugs. And I pledge to continue this progress. I'll lower the cost of insulin and prescription drugs for everyone with your support, not only our seniors. And demand transparency from the middlemen who operate between Big Pharma and the insurance companies who use opaque practices to raise your drug prices and profit off your need for medicine. 2 months ago, I announced that medical debt will no longer be used against your credit score. And I will work as president with states like here in North Carolina, Roy Cooper, thank you again, to cancel medical debt for more and more, millions more Americans. As for Donald Trump, well, he wants to repeal the Affordable Care Act, which 45 million Americans rely on. 45 million Americans rely on it for health care. That would take us back to a time when insurance companies could deny people with pre-existing conditions. We all remember what that was. And we're not going back. We're not going back. And remember, and this is why we're not going back, because we do remember, he tried to cut Medicare every year he was president, threatening a program that tens of millions of seniors count on. And according to his Project 2025 agenda, he intends to undo our work to bring down prescription drugs, the cost of prescription drugs, and insulin costs. Well, we've come too far to let that happen. So we're not going back on that, and let's talk about the cost of housing. So now, the housing market can be complicated, but look, I'm not new to this issue. As State Attorney General, I drafted and helped pass a homeowner Bill of Rights, one of the first in America. And during the foreclosure crisis, I took on the big banks for predatory lending with many of my colleagues, including Roy Cooper, and won $20 billion for California families when I was Attorney General. So I know how to fight for people who are being exploited in the housing market. And I know what home ownership means. It's more than a financial transaction. It's so much more than that. It's more than a house. Home ownership and what that means, it's a symbol of the pride that comes with hard work. It's financial security. It represents what you will be able to do for your children.
All right, everybody, you are listening to Vice President Kamala Harris. She is there on the campaign trail in Raleigh, North Carolina, really laying out some of her vision when it comes to the U.S. economy and specific initiatives that she will do. Cost of food, health care, home ownership. As expected, widely expected and reported out by our Bloomberg News team, it's these kitchen table issues in terms of reaching out to middle America specifically. That is her focus. And she talked about, creating this opportunity economy. She did point out, though, for weeks to come, I will address in greater deal plans to build out that opportunity economy. As we often say, the devil is in the details. Let's see what our Joe Matthew has to say. He's the co-host of Bloomberg Balance of Power, and we find him in D.C. Joe, come on in on this. I assume you are listening as well. Any surprises, any thoughts in terms of what we've gotten so far? I feel like we want still a little bit more in terms of specifics.
Yeah, well, I think your use of the term vision is appropriate here. We got a few details, but this is pretty broad strokes today. And she went out of her way. They've been billing this as the big economic proposal, big policy speech here. And she made clear that she's going to be adding more details to this as time goes on for something that she calls the opportunity economy. We did get some details, though, you're right, specific to food. That was really more what this was about, just a day after Donald Trump appeared with half a grocery store worth of groceries surrounding him outside Bedminster yesterday. She's calling for the first federal ban on price gouging on food. If there's any real news that came out of this, that's it. And a lot of the folks that we have talked with have made clear that that would be very difficult for her if she is elected president, very difficult to achieve without a full sweep. You would need the House and the Senate to approve a plan like that. But interesting to see her talking about this, talking about a loaf of bread, ground beef up 50%. You guys remember 1992? You're not old enough to remember George H.W. Bush asked about the price of a gallon of milk, and he didn't know what a scanner was at the grocery store either. So I guess our politicians have come a bit of a way since then.
That's because we're all checking out our own groceries. Of course we know. Come on in, Jess.
Well, also, she was talking about taking on the cost of health care here. How could she address that in the next few weeks with her agenda that could roll out soon?
Well, I think it's more about the fact that she would preserve and enhance what we all know as Obamacare, the Affordable Care Act. You heard the boos in the room there when she talked about Donald Trump trying to knock it down. There's one thing I want to point out here that might have sounded new or strange to some of our viewers and listeners before I get all the angry tweets on this. She was talking about a national sales tax that Donald Trump is proposing. And of course, he's not in those words. I'm assuming that she is referring to the 10% or 20% across the board tariffs that he has floated, because Joe Biden also referred to that as a national sales tax. There's also this fair tax debate in Washington, replacing the income tax with a sales tax. That's something that Kevin McCarthy proposed. Donald Trump had made some remarks about it, that he was maybe open to the idea a couple of years back. Ron DeSantis used to criticize him for that, but we haven't seen any real proposal from the campaign to that extent. So just trying to cut through the rhetoric a little bit there. I think that's what she was referring to.
Yeah, I think so too. I came across a little odd, but I was thinking the same thing. Hey, Joe, I do wonder in terms of voters, what matters? Do they want the specificity of understanding, okay, this is what a candidate's going to do, or is it smarter for a candidate to be much more broader in terms of its approach?
Yeah. I think there's a lot to be said. I know where you're going here. The more details you add, the more that they could become a liability on the trail. And, that's been the knock on Kamala Harris. I think that details will matter as we get into the debate on the 10th of September when they're actually contrasting their plans. But look, this is celebration time in Chicago. She's going to the convention next week, and I would get ready for a lot more soaring rhetoric than details when it comes to the economy.
You're looking forward to next week?
Our bags are packed. I'll tell you what, it's going to be interesting. These events are always a big deal for anybody. The Super Bowl of politics is into this stuff, but we're also talking about tens of thousands of protesters in Chicago. You guys hear all the references to 1968. We're going to go there in person and find out ourselves, and we'll course, let you know how it's going.
And following it all. Joe, as always, so appreciate it. Safe trip and looking forward to your coverage next week. That is, of course, the co-host of Balance of Power, Joe Matthew, with Kelly Lyons. Catch them at 6 p.m. Wall Street time, 5 p.m. Wall Street time, forgive me, right here on Bloomberg Radio and Bloomberg TV. All right, Joe, there in D.C. We're going to continue to track Kamala Harris on the campaign trail, bring you any headlines that are certainly pertinent to the Bloomberg audience. Having said that, as we head to a break, you've got stocks rallying, folks. We are looking for perhaps the best week of 2024 when it comes to U.S. equities. Right now, the S&P 500 just up about 10 points, up 0.2%. Little changes. NASDAQ 100 just up about 19 points, and the Dow Jones Industrial Average up more than 100, but again, small on a fraction basis.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. MasterCard is cutting 3% of staff worldwide. This according to a spokesperson for the payments network. That would work out to about 1,000 people based on its reported employee count at the end of last year. MasterCard shares little change right now, up less than 0.1%. Maravai Life Sciences Holdings shares soaring after a report that the company received a takeover offer from Repligen Corp. Maravai shares, they're up 21% after Reuters first reported the approach. Maravai does research, development, and manufacturing for drug makers. Repligen focuses on manufacturing biological drugs. Rivian Automotive has paused production of the electric commercial van that it makes for Amazon. The reason? A parts shortage and the latest supply chain snafu for the EV maker. Rivian said the temporary stoppage began earlier this month at its factory in Normal, Illinois. The EV maker declined to specify which components components are in short supply, but said it expects to recover all missed production, although it did not provide a timeline. Rivian shares down by 4.4%. After earnings, Applied Materials down 1.9%. It did deliver an inline sales forecast that disappointed investors who've been looking for a bigger payoff from artificial intelligence spending. Texas Instruments is set to receive $1.6 billion in CHIPS Act grants and $3 billion in loans. That word from the Biden administration. It marks the latest major award from a program that is designed to boost American semiconductor manufacturing. Shares of Texas Instruments today, TI is moving lower, down now by 1%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week. Go figure, the stock market on track for its best week in 2024. Great backdrop for today's Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle and her special guest. Abigail, all yours.
Thanks so much, Carol. And joining me today for Options Insight, I'm very pleased to say, is Spencer Hakimian, the Principal Officer, Investment Officer, CEO of Tulu Capital Management. Great to have you with us, as always, Spencer. The last time you joined us, you had a very prescient call on gold, and I know that you did well with your options trade. And now you're taking a look more at rates. You know, I was just pulling up a chart of the 2-year yield. Really of interest to me right now is the yen and the unwind of the carry trade. I think that there could be more to.
Okay, you're deep in the jungle, hanging with a friendly jaguar. Or how about in outer space playing the bass? Let your imagination run wild with the new generative AI tools in Adobe Photoshop. Create anything you can dream up just by typing a text prompt. Treehouse in your jungle? Unicorn in your spaceship? Just type it. This changes everything. Hit the banner or go to Photoshop.com and try it for free.
Flight of safety, and at our peak last week, we were pricing in 8 rate cuts over the next 7 FOMC meetings. And just to put that number into a little bit of context, even at the depths of 2008, we never priced in 8 rate cuts over 7 meetings. And I just think, given the deficit spending that we are seeing, tech CapEx guidance was pretty strong for 2025. And even this week alone, mortgage refinance activity picked up pretty strongly on that drop in bond yields. I just don't think we're going to end up getting 8 rate cuts materialize over the next 7 meetings. I don't think it'll be necessary. And in light of all of that, we bought a put option against June 2025 SOFR, which again is pricing in 8 rate cuts. Now, if we even just get 4 or 5 or even 6 rate cuts, given how cheap that put option was to buy last week, and given how far out the duration is on the option, it's a pretty material payout if it was to just be a little bit less than what the market is expecting.
Well, based on what you did with the gold option that you bought, it seems as though you have an opportunity perhaps to make money here too. It's interesting what you're bringing up about that Haven play, though, because in terms of that 2-year yield making its move, just to return to that benchmark yield, from the beginning of July, it had been closer to 4.80, then all the way down below 4. That, of course, means bonds are rallying, a flight to safety, as you're talking about, and then that's when the yen started rallying. So even earlier, basically from July on, but especially that August part that you were talking about, this flight to safety, technically, just from a chart perspective, it looks like it's going to continue. Are you seeing any other signs of that the yen carry trade, that unwind, that there is more to go?
Well, there should be a little bit more to go. I don't think it is fully done because, look, the yen is in the mid 140s, and a few years back it was in the 110s. I think what could cause it to weaken further is if you get a comment from a deputy governor like you got last week, or even if the governor of the BOJ were to say something. If they don't want to raise rates, people are going to continue shorting the yen. It doesn't cost anything to short it. Virtually costs nothing. And you can go and buy things like the Aussie. You can buy the Mexican peso. You could go buy U.S. 2-year yields. So unless the BOJ is going to be forceful in a way not allowing people to short it, it will continue to be shorted. And I think we've seen that since the comment was made a few days ago. the yen weakened and everything else started rallying again. Risk assets like Bitcoin, tech, anything, and anything involving risk just seemed to went up.
Yeah, it's going to be interesting to see whether or not that continues. I know the BOJ will be speaking next week. Spencer Heikemian of Tulu Capital Management, thanks so much for joining us for Option.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. We are just about 60 minutes away from the closing bell on this Friday, August 16th. I'm Carol Masser. Tim is off. Jess Menton in the house. We're going to talk about markets. A headline crossing the Bloomberg: Fox, Disney, Warner Sports Service blocked for now in the Fubo win. So we're going to dig into that. There's been so much going on, I feel like, when it comes to the entertainment space. So just keeping a watch on that and looking for some more details on that. And we'll get into that in just a moment. Having said that, we are watching the markets. As we've been saying, we are on track for our best week of 2024, Jess.
That's right. If you're looking at how things are closing out today, you have consumer discretionary, actually the leader here, up around 1%, but all 11 industry groups in the S&P 500 are higher right now, Carol.
Yeah, so kind of interesting, right, to see this trade, and we're seeing some buying just in the last few minutes. So we're seeing kind of that upbeat sentiment, even with the little changes, kind of picking up some momentum. All right, so we're going to talk about that over the next couple of hours. We're going to continue to track what essentially we just heard from Vice President Kamala Harris, what Harris White House might mean in terms of the economy and the business market. So we'll dig into that a little bit more. Also, a story that's among the most read on the Bloomberg. It's about the Florida man who spent his GameStop riches on something more mainstream. We're talking about JetBlue.
That's right. And then, of course, another thing keeping a close eye on, tapping into influencers and beauty professionals for content. So that's another thing got to keep our close eyes on here, Carol.
All right, so lots coming your way in the next couple of hours. First up, let's get a check on the trade. Let's head things back to Charlie Pellet.
All right, I thank you very much. We move into the final hour of trading for the week, a week in which the S&P 500 index is up by about 4%. Do want to begin, though, with the headline that you just broke. The Fox, Disney, Warner Sports Service has been blocked for now in the dispute with Fubo. Big win for Fubo, and that stock Fubo shares, they are rallying right now. We do have Fubo up by 11.4%. Among the other players, Fox up 1.4%. Shares of the Walt Disney Company up by 0.7%. And Warner Brothers Discovery up by 1.2%. Again, the headline just clearing right now on the Bloomberg Professional Service. Developing story. We'll get you more details as they become available. Back to the markets. The Dow, the S&P, NASDAQ all pushing higher, close to session highs right now. On the S&P, up 15, up by 0.3%. Worth repeating the fact that for the week, the S&P is up by 4%. The Dow right now up 156, up 0.4%. NASDAQ up 53, a gain there of 0.3%. 10-year 3.86%. The 2-year 4.06%. Gold up $45 the ounce, up 1.9%. And a big retreat for crude, big defined as 2% today. A barrel of WTI 76.60 right now. Well, as for the markets and the prospect for Fed rate cuts, Katie Kaminsky is chief research strategist at Alpha Simplex Group. She was interviewed earlier today by our Tom Keene on Bloomberg Surveillance.
I really think that people are focused on the fact that they think now they're going to get cuts, and that's going to get us through any potential economic weakness. So I think it's surprising how fast market sentiment shifts. Right. And people go from being terrified to, everything's fine.
Katie Kaminsky of Alpha Simplex. So again, recapping here, 57 minutes to go until that closing bell clangs on Wall Street. We got the S&P up 15 right now, up 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A little bit more on that headline that Charlie mentioned. Fox, Disney, Warner Sports Service blocked for now in Fubo win. It's, of course, a streaming sports service. We're talking about Fubo TV, and they have been fighting things in a legal battle to block Fox, Warner Brothers Discovery, and Walt Disney from launching a joint platform that it says would be a Fubo killer and hurt consumers, too. So that is just kind of some context and some backdrop. But again, I saw Fox shares. They've been a little bit higher, I think, in today's session, just pulling it up here. And it looks like the stock is just, up about 1.3%?
Yeah, if you look at Fubo TV, though, up almost 18%, on pace for its best day since July of 2023 on the back of this news.
All right, so that's a big deal for them. All right, so let's stay with the markets and kind of the broader trade. We just heard from Abigail Doolittle in Options Insight. I got to say, I'm kind of shocked that after all the gyrations of the last couple of weeks, that this is what we're talking about on this Friday in August. Let's get to our Bloomberg News Chief Markets Correspondent Abigail Doolittle here in studio. Are you surprised that this is kind of what we're saying, or I don't know, how are you seeing it based on the last week and a half or 2 weeks?
I would say volatility breeds volatility. So if I take a look at the S&P 500 from its July peak, it then fell, I think, almost 10%. I'm going to measure it right now. Almost 10%. And now basically a rebound of my percentage function, so up 8%. So it's basically Newton's third law, what goes up, an equal and opposite reaction, what goes up must come down sort of thing. So it came down, and now we're seeing this rebound rally higher. The question is it going to last? For reasons that would be really difficult for me to articulate just taking a look at the charts, it looks as though it's not going to last. One way I could talk about this is a bottom that, first of all, the bottom, this last bottom in August, it's higher than the bottom in April. So we're closer to a top than a bottom. I guess that's the first point I would make.
Yeah.
The next point I would make is the kind of bottom that takes us much higher is a quote-unquote V bottom, which is a quick springboard higher. Now, this feels like that, but it actually presents as an area of bearish congestion as the bears and the bulls are kind of duking it out for what's next. Now, if we bring this back to what we were talking about on Options Insight, the yen carry trade, I believe, and it is simply my opinion, whether I'm supposed to have one or not, but it's my opinion that we're only about halfway through there in terms of the yen itself. Technically, the yen looks like it's going to easily go down to 130. Yen, I should say.
And layer on top of that, one of the most read stories, if not the most read on the Bloomberg today, right? It came out early this morning, is the carry trade that blew up the markets is attracting hedge funds again, right? So they're moving back into it.
Yeah, so we never learn, right?
So you kind of add on to it, right?
That's exactly right. I mean, this yen chart, the dollar, I was actually looking at the yen, but if you look at the dollar yen chart, it is just kind of dangling there. It has no support, and it's, so hedge funds might be able to make money off of that, but I mean, it's so bad that it's the Nikkei itself. It really looks to me like, and some other market folks that I talked to, that next week could be kind of make or break relative to what's happening in Asia. Now, what's interesting is, why was there this flight to safety? Because people can say, well, they're selling yen, but ultimately it's a funding flow. They needed money. Why did they need that money? So why was there this flight to safety? Why was there this flight to bonds at that time? I think that's a little bit overlooked. And there's one thing that's interesting in Japan. On the day when the Nikkei was down 12%, banks, the Topex Banks Index, and some Mitsubishi, for instance, down 20%. There's some thought that some of those banks, the yen that it was collateralized, it was lent out against collateral that's thought to be bad. If that turns out to be true, it could still get ugly. Now, could it also move the other way? Could this have been the bottom? Absolutely. It doesn't appear as though that's the case to me. I mean, Warren Buffett, this is really interesting if we take it, but Warren Buffett, with his 13F, he reduced his Apple position in a massive way. It's still the biggest position, but their view on equities right now, even though they're not saying it this way, is negative. They have a massive cash pile. 45% of their portfolio is cash. That is unbelievable. Now, can you say they're making
and not normal for them, right?
It's not normal for them. But you can also say the one reason that they're doing it, having nothing to do with the stock market, is because you can make a lot of money off of cash right now. Yeah. So it's actually a position for them. And they're not known as market timers, but nonetheless, when you think about it, and you also have to think about it, Apple, it was his lieutenants, Ted and Todd, that bought it at 11 times. But it was he who apparently added on and added on. When they started selling last December, and you, Tim, and I have been talking about this for months, it was at 33 times. So they may not be market timers, but that's pretty well done. That's a lot of valuation that they got right.
It's why, Warren and Burrow. We hold them all up here and everybody else.
Well, since we have you here, I wanted to ask you technical questions here for the S&P 500, because the S&P is already trading back above its 50-day moving average, and of course its 100-day moving average that had dropped both below a couple weeks ago. What are the resistance levels and support levels that are key for this index going into next week?
So we're going to do what I love to do, which is live charting. So I'm just
I love that you do this.
To me, it's just so fun.
Because her brain's working and she's pulling stuff up on the terminal.
So there's something happening. There's something happening on this chart that would be very hard for me to articulate. The one way I could say it is, it's the move, and it's contradictory to what I just said. So this is not a V bottom, and yet it's a parabolic move up. It's just not going to be able to be sustained. To the best of my ability to determine, we are going to probably do some kind of a range between roughly the 50-day moving average and the 200-day moving average, maybe a little bit above it, for a couple of passes until there's a range established and those bulls and bears, one side or the other, loses. Now, there could be a little bit more upside here. If we take it out to the weekly, which is important to do, it appears so. Yeah, I mean, it's just sort of a messy chart. It's kind of like Apple a couple weeks ago when it just looked off, looking at it. It's a messy chart, but the RSI on the weekly basis is lower highs, which tells you that there's, not as much momentum as you would like to see here. But there's the fact that I'm unable to articulate what's going on here, I don't like, because Albert Einstein has a quote that says, if you can't say it, you don't understand it well enough. If I had more time, I could, but there's something going on here that is really very mixed. I would be surprised if we do go higher, if it holds for any period of time.
All right. Well, it's going to make it for, an interesting couple of weeks, especially as we get through Jackson Hole and get into September when everybody's back and everybody's kind of focusing on every little move. Abigail, thank you so much. Chief Markets Correspondent Abigail Doolittle here at Bloomberg News joining us in studio. All right, we want to get back to politics because that's going to be another thing that we're going to be obsessing about until we get to the election come November, tracking it all for us and really setting us up this week ahead of Kamala Harris's speech where she addressed the economy and started to get into some specifics. Bloomberg News White House correspondent Josh Wingrove, he's joining us from D.C. So Josh, you did write, I feel like, the story that set us up so well about what Harris would mean for business and the economy. How did what we hear kind of match up with expectation? You said it would be kitchen table issues. It was.
Yeah, and she's really focused on sort of expanding stuff that they were already doing or that the Biden-Harris budget had proposed, as opposed to sort of, totally pulling new stuff out of thin air. Today had a focus on expanding the child tax credit, help on housing, both on the supply side and with subsidies for first-time buyers of $25,000. I should note, they've not put a dollar figure fiscal forecast on any of this. Some outside estimates are already coming in, including the Committee for a Responsible Budget saying this would cost about $1.7 trillion over 10 years or so. So big numbers that she's rolling out, but it's an election and people, are punch drunk and we're throwing ideas at the wall. I guess that's the vibe right now. But definitely focused on sort of like this question of trying to sort of build what she called an opportunity economy. So that really is sort of setting her lens on things. She thinks that too few people can get ahead, and that's her starting point.
And she did make it clear that in the weeks ahead, that's when she's going to start rolling out more specifics. But which particular issues do you think she will have more specificity on versus which ones do you think she's going to be forced to have to be a little bit more broad with so that she doesn't have to walk back certain issues?
Well, I think we'll be looking on the housing stuff for more detail on that. The other governments in the past set targets of building X amount of homes. She said 3 million new units. It often struggles to get there for all kinds of reasons, including that the federal government doesn't typically build homes itself. So we'll be looking for more, I guess, on that. She has other policy that we expect her to roll out too. She hasn't said a lot about other subjects like, hasn't talked about the Fed, for instance, as I wouldn't expect her to, but, she hasn't talked about the Supreme Court. She hasn't talked about a lot of things that she would want to call for. But we're in this sort of blitz zone right now, really quickly trying to sort out what policies she can add in, a few weeks, really, because normally after Labor Day, you don't add a lot of stuff to the sort of, display case. You just sort of like sprint to the election time. So she's right now just trying to get her own spin on things, a couple of staff changes, a couple of re-emphasis, but not overthrowing the whole apple cart.
Yeah, it's kind of the cliff notes of a race to the White House or, coming up with your plans. Having said that, Joe Matthew mentioned earlier of Balance of Power, one of the co-hosts said what jumped out for him was her talking about Kamala Harris, talking about the first federal ban on price gouging on food. Yeah. So that's an interesting one, although we've talked about this, right? And this is a difficult one maybe to implement and do.
Great example of something that does not have a lot of detail on it. She's also said that they would set clear rules of the road, but literally won't say what those are. This is a rhetorical argument right now, and that's fine in politics, but it is at least unclear what she means when she says she's going to change or firm up rules of the road for companies, particularly grocers and people in that space. One takeaway from her speech, though, today is she seems riled up about middlemen, for lack of a better phrase. She talked in the context of healthcare, so we could be seeing sort of a enforcement pursuit of some sort of, place where you have market consolidation, the Biden administration already going after meat packers, where they can make an argument that they think companies are essentially colluding through, a single or small number of firms to drive prices up. But, the other thing about this is it's a high wire act. Republicans, I'm sure, were screaming at the television saying, oh yeah, grocery prices are high? Who's responsible for that? And of course, no one person is responsible for that, but Harris is both campaigning against the status quo as the sitting vice president. And so far, polls show that people are kind of okay with her doing that, or at least it's not blowing up in her face. And that's an interesting dynamic here as well. So she's, saying, isn't it wild how house prices and house affordability is such a big issue, and grocery affordability is such a big issue? That's normally what you hear from someone running to unseat the incumbent, not the incumbent vice president running for the presidency.
When it comes to some of these top initiatives, how much of it really depends on where Congress stands, if you have a split Congress or if you do have more unanimous decisions there?
I mean, all of this, so much of what she has announced today is essentially money stuff that will come down to Congress. Now, there are signs that Democrats are feeling a little more bullish, at least in the House. The Senate remains a pretty tough slog. It looks like it'll more or less come down to Montana, which is a pretty red state, with a Democratic incumbent trying to hold on there that could swing things. But it'll really come down to, how these elections come out in all three chambers, or all three, buckets. And then from there, they'll have to figure out what they want to do in 2025 when so many of the individual provisions of the Trump tax cuts expire. So everyone who gets elected and takes office in 2025 needs to decide, do you do nothing and let everyone's taxes go up and we all get blamed for it? That's really unlikely, regardless of whether it's Republicans or Democrats in control of any one thing. And so everyone thinks there's going to be some kind of a deal on taxes of some kind in 2025. And so what Harris is saying is, here's my starting position. Child tax credit, big budget item. Subsidies for first-time home buyers and first-generation home buyers, which existing Biden, calls have already called for subsidies like that, and so forth. But right now, she's really trying to sort of set these banners of what her starting position in talks will be. Do not go and buy a house right now because you think you'll have $25,000 from the federal government. You won't. It's not ready quite yet.
Hey, listen, bottom line, just got about 30, 40 seconds here, Josh. I mean, you cover the White House. How much of what she says on the campaign trail, does she kind of bounce it off the folks in the White House just to make sure we don't ruffle any feathers? Or what's that balance? Or is there none? She can do kind of what she wants to.
I think she's gradually moving into firm hands in the reins mode, but neither Kamala Harris nor Joe Biden have any interest in this exploding into a fight. We're going to see a show of unity in Chicago next week at the DNC, and it helps that a lot of what she's proposing is stuff that really draws heavily on what Biden believes. He picked her for a reason. They are aligned on a lot of these things. She's putting different emphasis on it, but right now they're singing from the same song sheet.
All right, well, looking forward to all of you and the team's coverage. Josh, thank you so much. Josh Wingrove, he's Bloomberg News White House correspondent, joining us there in D.C. All right, everybody, still to come. Many voters in one of the key swing states says its economy is on the wrong track, and they could decide who actually wins the White House. And you brought up Congress.
That's right.
Control Congress. So this could be a really important one. We're coming back with that story on the other side of the break. S&P 500 just up 0.2%. The NASDAQ 100 a gain of about 0.1%. This is Bloomberg Business Week. Carol Master along with Jess Metten, and this is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got 39 minutes to go ahead of the closing bell. Stocks on track for their best week in 2024. Best defined as a 4% gain. A handful of economic data over the past few days doing little to alter bets that the Fed will be cutting rates in September. Here's where we stand. S&P right now up 10 points, gain now of 0.2%. The Dow doing a little bit better percentage-wise, up 0.3, now up 126. Nasdaq up 34, a gain of 0.2%. 10-year at 3.89%, the 2-year 4.06%. Spot gold up $46 the ounce. Spot gold now at $25.03, up by 1.9%. West Texas Intermediate crude down 1.6%, lower by 2.1%. As for the overall market backdrop and what's been going on this week, Liz Ann Saunders is Chief Investment Strategist at Charles Schwab.
We are still dealing with cross currents in the economy. This is not a straight line in either direction. And when we start to cheer that, okay, the news is Goldilocks, like, you kind of get hit with something in the opposite direction.
Liz Ann Saunders of Charles Schwab. Buyer shares rallying following a significant win for the German company in the long-running cancer litigation over its Roundup weed killer. Buyers' ADRs, they're up today by 8.7%. Again, recapping, stocks higher. S&P up 11, a gain of 0.2%. The S&P right now at 55.54. Bears repeating, we are on track for a 4% gain for the S&P this week. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie Pellet there with that Bloomberg Business News Flash. We're going to stay on the campaign trail, really the election, the upcoming election. A story about one of the key states in the U.S. presidential race, and that, Jess, is the swing state of Michigan.
It is, and so crucial, and a must-read story here, and a must-win state when it does come to Michigan, when you're thinking about the battleground states here, and its angst over inflation and EVs and so much more, and why it matters so much on who wins the White House, and of course, who controls Congress, Carol.
Yeah, the story and the reporting done by Bloomberg News congressional reporter Eric Wasson. He joins us right now on the phone from Capitol Hill. Eric, so good to have you here with us. This state, how important is it, and why might it be more important than maybe some of the other swing states?
You know, it's really important because we have a Senate race, an open Senate seat. Debbie Stabenow, now the longtime Michigan Democrat, is retiring. So that's an open seat, a chance for Republicans to have the first Republican senator from Michigan in decades. There's two really, that Slotkin moving up from the House opens up her very toss-up 7th district. And then Dan Kildee, who's been the longtime Democratic representative of the Flint area, also retiring. So there's an opportunity for Republicans there. Democrats have to win all three of those races to get the House and Senate. And obviously, the blue wall, Michigan, is very crucial for Kamala Harris. And, I put 900 miles on the car, drove all over the state. And what I hear from voters, they're very sophisticated. They're very tuned into the needs of the auto industry. They're skeptical of Biden's push into EVs. They don't really use them much themselves. Only 24% of Michiganders have any interest in buying an EV. And they're skeptical that others will as well. They're worried that Biden's pushing GM and Ford and Stellantis into bankruptcy. And they're very worried that, even if EVs do catch on, that there's fewer union jobs. There's just, 40% fewer parts in an EV. So there's a real debate going on. And there's related industries. I went and found this restaurant, Tony M's, right near the GM plant, where the owner, she supports the UAW, has strikers out front, but she might vote for Trump because her food prices are so high, she might have to lay off some of her 25 employees.
Well, she said, I love the quote that you say, things are different now. When GM got rid of their third shift, our business dropped. They used to be busy, right? They were open at 7 in the morning and kept the lights on until 2 a.m. It's not the case anymore, Eric.
Right. They had a morning shift when people came off the night assembly and did had a happy hour. But she said if GM does go and there's talk of expanding production again due to this EV conversion, she will reopen in the morning. So but she's a little worried that that's actually going to happen. There's been rumors of that. But she an amazing woman. She talked about how just went through all of her different prices, but she loves to do helium balloons for the kids. That used to be $175 a tank of helium. Now it's $478. She's really getting crushed here, and she wants to keep this family business going. But we heard that from a lot of people. I talked to the person who did a lot of the tile work in the New Detroit airport. She has commercial contracts falling through to the insurance rates. And people just really want to hear economic policies. And I think we're seeing Harris today do that. Certainly, Alyssa Slotkin told me she doesn't want to hear anybody talking about how great the economy is and citing statistics. The people she talks to wants to hear real solutions, especially on those grocery and gas prices. And they're trying to come up with something.
Hey, Eric, one thing I want to ask you, I love that you put a lot of miles on your car. Sorry about that, but that's a lot. But when you walked away, I remember being in Detroit years ago, and I think my luggage got lost. I had to buy some clothes. Everything was like going out of business. There were stores closed. It was really depressing. When you rode around, is it very depressing? Like, how would you describe it?
It depends. Detroit certainly has its areas that are, the downtown is reviving. There is, this bit of a miracle here, Michigan Central Station, et cetera. There are vast areas of rundown housing that have been cleared out. It's almost like gone back to nature where they've just removed the housing and let it go back. I went to Saginaw, which is, this is where Nexteer and other major components of the auto industry that make the steering had these huge plants. And this area used to have 80,000 GM workers. Now it has 8,000. And there's a crime wave. There's an internal, sort of a rundown feeling in the center of town. But then you go a little bit outside of that, and there's a bit of more of a thriving area where they have chips related investment that they're excited about, semiconductors. So I think Michigan could go either way. There's a real feeling and pride among the people, even if they're not directly in the major manufacturing industries, but they're in related industries, that this state really has a skilled workforce and could be brought back. But they want to see, and they're really debating over the best way to do that. And, I think the candidates are really trying to acknowledge that. They're not, Harris is no longer talking about who's weird, but she's coming up with these ideas. And you can debate whether price gouging legislation will actually be effective. But Slotkin certainly talks about negotiating drug prices, and we've seen some ability to lower
you mentioned
prices.
Slotkin, the Michigan congresswoman. I love the quote in the story. If I hear one more Washington-based, Harvard-educated person tell me that, no, it's really better and the economy is actually very good, I'm going to have to maybe depart that meeting. I mean, this is what we talk about a lot, right? There's the big, broad economic statistics we talk about. We look at the market. We look at, what's going on in the labor market, even though signs are slowing. But when you get down on the ground, it's often a very different story. And this is something that many would say, political strategists, that the candidates have to be looking at.
Yeah, and I think so. One person's quote in the story is Stacey Washington. She was volunteering for Rivet, Kirsten McDonald Rivet, who's trying to replace Dan Kildee, making phone calls because her issue is gun violence. Her daughter was murdered 2 years ago. She's very interested in controlling guns. But I asked her, are you going to vote for Trump or Harris? I thought she'd be a lock for Harris. She says, no, Harris has to prove herself. I might vote for Trump. My personal economics were better under Trump. So this is how people are voting. They're voting their pocketbook. And, all the way down the ballot, we talked to Hertel and Rivet, they really don't want to pretend like the economy is great.
Right. Eric, you're talking about the economy too. What about the state when it comes to Michigan specifically? Because we talk so much about Detroit, obviously automakers here, but what other key issues and industries really matter here? Because you also mentioned chips earlier.
Yeah, no, I think the chip industry, and one of the things we've seen is battery plants go in for the EVs. There's an Ultimum plant, a joint venture with South Korea going into the Lansing area, 1,700 jobs the Democrats are running on. But then there's a separate one by Goshen, which is a Chinese-backed, that Republicans are on the attack over. And in fact, the local town council tried to block the land for that. It's a really heated battle over whether you're going to, allow the Chinese in, real battle over critical minerals for that industry. So I think, it's not just EVs, but it's the related, the battery technology, the chips, just trying to really center and build out from the historic auto industry and revive it. But I think, everyone talks about costs. And I think, it's interesting. The gas prices are actually higher when I drove around Michigan than I see here on the East Coast.
Yeah.
It was close to $4 a gallon most places. And, there's various reasons for that. But I think they're not really embracing the EVs because culturally, most Michiganders, if they had a little bit of money. They have a fishing hut way up north in the state. They drive every weekend 4 hours. They don't see the charging stations. They don't see the infrastructure.
Yeah.
There's some potential new solutions. Stellantis is building a Ram charger with a small gas engine to supplement range. Until they can address the range anxiety, Michiganders are not embracing EVs.
Hey, before you go, one thing I want to ask you, since you did drive around, you had these conversations, you got to feel, do you feel like there are many Michigan voters that just haven't made up their mind yet, and maybe the debates will be important, maybe some of the specificity we get on either Kamala Harris's or Donald Trump's, programs, what it means for the economy, that could sway them? Are a lot of them still undecided?
Yeah,
and just
absolutely.
got about 30, 40 seconds here.
Especially in that Lansing and Flint area. The other thing that is going to matter for Democrats is turnout in Detroit. Gaza is a big issue. If there's a Gaza ceasefire this weekend, that will help Democrats. Arab Americans make up a big population in Detroit, and they may stay home. So those are the big factors in Michigan, those two.
It's just fascinating, right? But love it when we can get really a good picture into what's going on in the ground in a state that's going to be so, so important come the November outcome. Eric, thank you so much. Eric Wasson, he's congressional reporter at Bloomberg News, joining us there not on Capitol Hill. Sorry, my notes said Capitol Hill. You are not, Eric, in Capitol Hill. Otherwise, it looks a lot like a home. In Maryland. Hey, listen, thanks so much. Have a great weekend. Some great reporting. And like I said, giving us some insight about what really matters
That's right.
to the voting public.
Yeah, he was mentioning gas prices. I was looking at AAA. The average gas price in Michigan actually is around $3.50. The national average is around $3.43 right now.
I don't know. When I go through, 93 octane or whatever the heck it is, it's like, I don't know, like it's still 70 or 80 bucks, I feel like, to fill up the tank.
I don't have a car, but...
You are lucky.
One day I will.
All right, everybody. That was Eric Wasson. I'm Carol Master along with Jess Menton live here on Bloomberg Business Week. Let's get a check on world and national news. Off to D.C. we go, and Amy Morris. Amy, all yours.
All right. Thank you, Carol. Vice President Kamala Harris today announced her economic plans, calling it an opportunity economy.
Everyone, regardless of who they are or where they start, has an opportunity to build wealth for themselves and their children. And where we remove the barriers to opportunity, so anyone who wants to start a business or advance their career can access the tools and the resources that are necessary to do so.
She says key to developing an opportunity economy is building up the middle class. Mediators to the Gaza ceasefire talks say the two-day talks wrapped up and they aim to reconvene in Cairo next week to seal a deal. President Biden spoke to the progress being made.
We are closer than we've ever been. I don't want to jinx anything, but as my grandfather said, with the grace of God, good little neighbors, a lot of luck. We may have something, but we're not there yet. But it's much, much closer than it was 3 days ago.
President Biden speaking from the Oval Office. And of course, the election is not decided yet, but former President Donald Trump is looking ahead to his transition. Bloomberg's Nathan Hager reports from Washington.
Trump has named billionaire Cantor Fitzgerald CEO Howard Lutnick and World Wrestling Entertainment co-founder Linda McMahon co-chairs of his transition. Vice presidential nominee J.D. Vance and Trump's sons Don Jr. and Eric will be honorary co-chairs. The former president has a history of chaotic transitions. He fired former New Jersey Governor Chris Christie days after winning the 2016 election. And the Biden transition says Trump's staff didn't cooperate with them in 2020, as the former president insisted he won that election. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all pushing higher. S&P holding close to session highs right now. The index at 55.55, up 12. Gain right now of 0.2%. On track for a 4% gain on the week. The Dow up 119, up by 0.3%. By the way, that S&P gain best for 2024. NASDAQ up 39, now up 0.2%. Russell 2000 index of small cap shares up by 0.4%. 10-year 3.88%. The 2-year 4.05%. Gold up 2%. 25.05, trading for the first time ever above 2,500. Yes, a record on spot gold. West Texas Intermediate crude down 1.8%, 76.76 a barrel on WTI. Fox, Warner Brothers Discovery, and Walt Disney have been blocked by a judge in Manhattan federal court from launching their streaming sports service 1 week before its rollout, taking a blow from their smaller rival, Fubo TV. Now, Fubo shares on that decision. Fubo right now up by 21.8%. Among some of the media names, Fox up 1.3%, Disney up 0.6%, Warner Brothers Discovery up by 2.2%. Recapping, stocks higher, 19 minutes to go ahead of the closing bell. Will these gains hold? S&P up 12 right now, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Mitten and Carol Master here in the Bloomberg Interactive Brokers studio. We have a little under 20 minutes left here until the closing bell, but the S&P 500 on pace to close out its best week of the year
Who'd
here.
have thunk, right?
That's right. And what a tear, added close to about $3 trillion since that low in August. So who better to talk with than Mike Rohde, Senior Investment Director at American Century Investments here. It has about $250 billion in assets under management. Joining us from Kansas City here on Zoom. So thank you so much for coming in, and especially late on a Friday heading into the closing bell here. But as we're setting up and coming off of a week where we just had the latest reports when it comes to consumer prices, producer prices, obviously retail sales coming in stronger than expected ahead of course, hearing from the man himself, Fed Chair Jerome Powell. And a week from now at Jackson Hole, what's your thought process of the rebound where we're at and what's ahead coming as we're still in one of the weakest months of the year here, seasonality-wise, for U.S. stocks?
Yeah, thanks, Carol and Jess. It's been definitely no summer doldrums around here. If you look at July and August, it's been pretty crazy. But we've seen small caps kind of really outperform in July, give back once there was a renewed concern that we were headed into a recession. And then if you look at the data points this week, they've been much better, more thought about a soft landing. And in that scenario, I think small caps are actually looking really attractive just given current valuation. They are dramatically underowned by institutional and retail investors. And then finally, you have fundamentals improving. So you have earnings growth to outpace large caps next year. So we're pretty positive on small caps.
It's interesting though, because even after that rally in July, from when you're looking at, say, the Russell 2000 versus what the S&P 500 was doing, actually some of the price basis wasn't quite as cheap as it had been in the end of June. So a lot of people were viewing it more as a trade rather than an investment here. How do you view that as more of an investment? Why do you like that, and why do you want to own it when it still struggles when it comes to a forward earnings perspective?
Yeah, so forward earnings are expected to be higher than that of large cap for next year. So if we do see acceleration in small, I think that'll be a huge catalyst. You also have the yield curve steepening, and that should also be a good fundamental catalyst going forward. And then finally, you look at reshoring. So that's a big driver for small cap companies. It's really, small caps are kind of a pure play on the U.S. economy. 80% of revenue comes from inside the United States. They're directly exposed to CapEx, and they're much more highly correlated with CapEx. And so I think when you're looking longer term, reshoring, I think, has the potential to drive earnings for small for the next 5 to 10 years.
Interesting. It's a little tricky, though, right? We're kind of at this juncture that if the economy keeps moving along, right, and we see the market and opportunities kind of broaden out, right, small caps have a chance to gain. However, if we start to see some slowdown in the economy, they're going to get hurt.
Yeah, they are. Small caps are higher risk. They're more economically sensitive. They're smaller businesses. But I think that a recession is largely priced in at these levels. So we've been talking about this recession for 4 years. American Century sees about a 30% chance of recession over the next 6 months. But I think it's largely reflected in valuation. The spread between large and small is the widest it's been in decades. So like we like to say, if we do head into a recession, how high is the window you're going to fall out of? And with small caps, it's not that high. And then historically, coming out of recession, halfway through recession, you get really spectacular returns coming out of small caps. So I think a lot of the bad news is already priced in.
And you think even if we get a recession coming out, it'll be good?
It'll be great. On average, you see about 40% type returns over the next 12 months, kind of coming off of the bottom of recession for small, twice that of large. And rate cuts will help small caps. There's a lot more interest rate sensitive companies and spread businesses in the small cap world. Look at banks, for example. That's an area where we have a contrarian position. Our small cap value team is pretty significantly overweight banks, which should really, really benefit from a steepening yield curve.
So on average, over 40% returns off the bottom for small caps, you say, coming out of recession. Interesting. Okay.
That's correct.
I have to ask, though, what do you think the catalyst is going to be? Obviously, people are going to point out when it comes to recessionary concerns, the tightest monetary policy, restrictiveness in recent memory here. But you look at the latest Atlanta Fed GDP model for the current quarter, around 2%. It was closer to 3%, but can be a little bit volatile here. So what's really going to push the economy into a recession from your firm's view?
Yeah, so again, we actually think we're going to have more of a soft landing. So we see 80% chance of economic slowing, which I think the jobs number just indicated that, yes, the economy is slowing, but within that, 50% is more of a soft landing and 30% is recession. So recession is not our base case right now. And again, if we do have recession, really hard to call, but I think small caps have already priced in a pretty bad outcome. And the other thing is, the biggest trade that we saw last year on the institutional side were big managers kind of chasing those large cap growth companies, the Magnificent Seven, because they were underweight and underperforming. And so I think what you'll see is earnings growth for those large tech companies starts to decelerate this year, and small caps start to accelerate. I think you're going to see a real shift in rotation into small caps.
Hey, Mike, you guys have $250 billion in assets under management. You see a lot of money coming in, coming out, the flows. Where is money going into right now? Where is it going out of?
Yeah, so I'd say we've seen continued flows into our large growth strategies, which have done really well versus the benchmark. But we also have seen flows in small caps. So one of the interesting things is, everyone should hopefully have some small cap allocation in your portfolio. Active management historically beats passive in small caps. And so we've continued to see inflows in our small cap strategies. I think, if you look at our assets under management in small caps across the board, we have about 40 billion. That would make us like the fourth largest in the industry. So we've had a lot of success in small caps, and that's been during a period where the asset class has really been out of favor. So we'll see. But yeah, I'd say in terms of flows this year, it still has continued to be growth, but I think we're well positioned if and when that shifts to asset classes that haven't performed as well.
Is the flow that you're seeing in small caps unusual, or is it kind of the same kind of flows you see consistently since you guys have been doing this strategy for a long time and you've had a lot of money under management? Is there something unusual about it, that there's more than normal?
No, I wouldn't say so. So there was, just stepping back, looking at the ETF, shortly after the small cap run where small outperformed large by 10% in July, there was a real uptick in small cap inflows, like just into the ETF. That has tapered a bit recently. But in terms of our firm, yeah, we've had really strong flows across the board, just given our performance versus the benchmark.
All right, cool stuff. Have a great weekend. Mike, thank you so much. Mike Rode, he's Senior Investment Director at American Century Investments. $250 billion in assets under management, joining us from Kansas City on this Friday. Just we've got about 10 minutes to go, getting ready to wrap up. We're seeing a little bit of a curve over, right? Off our highs of the session.
That's right, heading into the weekend. But still, S&P on pace for its best week of the year.
There we have it, right? So that's pretty remarkable. All right, folks, do not go anywhere. We're going to head over to our TV colleagues in just a moment. Head to them and count you out of the close.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Job cuts at MasterCard. Shares little changed right now. MasterCard cutting 3% of staff worldwide. That would work out to about 1,000 people based on its reported employee count at the end of last year. Again, we got MasterCard right now down by about 0.1%. Bryant Riley, the co-founder and largest shareholder of B. Riley Financial, has informally offered to buy the shares of the embattled investment firm that he doesn't already own. Now, according to a regulatory filing today, Riley is willing to buy the stock at $7 a share. And while that is an almost 40% premium to yesterday's closing price, it is far from the roughly $50 that the LA-based brokerage and investment firm was trading at 1 year ago. B. Riley shares, they're up today by 14%. Sigma Lithium is based in Canada and mines in Brazil. Lithium is used in batteries by electric vehicles. The company just reported earnings. Ana Cabral is co-chair and CEO of Sigma Lithium, and she talked about the company's business this morning on Bloomberg Intelligence.
We have two operations. They're very distinctive, but they're vertically integrated. We have a mine that mines lithium rock, and then that rock gets fed into an industrial pre-chemical plant where we process that rock into lithium materials. And at that, we are producing zero carbon lithium. And so we're the only company in the world that produces zero carbon lithium in scale.
And that is Ana Cabral, the co-chair and CEO of Sigma Lithium. And those are our top company stories at this hour. Stocks higher ahead of the closing bell. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, just under 5 minutes left in the trading session. Jess and I are going to head over to our TV colleagues and just hope that they're not wearing red. Otherwise, we're all going to be
We're
in
twinning
red.
today, Carol.
We are
Our
twinning.
dual red dresses.
Blondes and red today. That's Bloomberg Business Week,
Friday.
everybody. Yeah, exactly.
Friday
Tim is off. He'll be back next week. Having said that, just a few minutes left in the trading session. We're going to head over to them, and we'll cut you down to the close today and for the week. Having said that, an interesting story, courtesy of one of our producers, Elizabeth. It's over in the Wall Street Journal, and federal authorities arrested a woman for allegedly trying to defraud Elvis Presley's family of millions of dollars and steal the family's ownership interest in Graceland. Of course, the mansion in Memphis, Tennessee, where he once lived. Elvis Presley, everybody knows Graceland.
That's right.
But you might remember, she tried to do this and I think take over, like I say, like I own it.
Right. And it's just a fascinating, just the background and the history of a family like this. But when it comes to authorities, they're saying that Finley allegedly posed as 3 different people from a fake private lender. It's incredible. But then she also falsely said that Lisa Marie Presley, of course, Elvis's only child, had borrowed around $3.8 million in 2018. And so it's how all this plays out. And it's so unfortunate when you have a lot of different tragedies that have happened with this family.
It's unfortunate, but it's like, come on.
Right.
It's just crazy town. It's just like Finley. So she falsely said Presley used Graceland as collateral, didn't pay the loan, according to the criminal complaint. It was filed in the U.S. District Court for the Western District of Missouri. You might recall Presley, Lisa Marie, that is, died last year at age 54. Finley was asking for $2.85 million from the Presley family to settle the debt, according to the complaint. She also allegedly published a foreclosure notice in a Memphis newspaper saying that Nosani planned to auction Graceland to the highest bidder on May 23rd, 2024. So, yeah, these are just like one of these interesting stories that just goes around and around.
And the Justice Department saying that Finley faces a mandatory maximum of 2 years in prison for aggravated identity theft and a maximum of 20 years in prison for mail fraud.
Yeah, like crazy stuff. Everything with Graceland, I don't know. Elvis sightings, Graceland. There you go. I don't know what to say. I guess we're going to wrap that one up. But anyway, an interesting story and at least some completion. We're going to complete the market, the trade. We're heading over to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through the Closing Bell, a global simulcast. And it starts right now, joined by Scarlett Fu in the television studio, Carol Masser in the radio booth, Jess Menton filling in today for Tim Stenovic here on a Friday. Carol Masser, the stocks once again are in the green across the board.
And first of all, Scarlett, I'm so glad you got the memo on wearing red. I'm a little upset with you, Alex, and a little bit upset with you, Romaine. But having said that,
Did you lose our numbers or something? You couldn't have just texted us?
I don't know. I'm looking at home builders. They're actually higher today, right? Some weak housing data, and nonetheless, we see that move. Some optimism as we head into the weekend, and I feel like what's going to be maybe a big week next week.
That's right. S&P 500 on pace for its best week of the year. Of course, we've been talking all day about that, but when you look from the low that we had earlier this month, the S&P 500's added about $3 trillion in market value, Scarlett.
There is a little bit still of people kind of taking a breather after what we saw this week, but I definitely felt at this start of today's trading day that it wouldn't be surprising if you saw things kind of drift lower into the close because of so many big events next week, whether it's the Fed minutes or Jerome Powell's speech or even the Bank of Japan governor's speech coming up on Thursday night, Friday morning.
Also, guys, volume is really terrible.
Yeah.
It's like, if you look at S&P volume is like down 21% versus the 10-day moving average. So like, I mean, let's be honest, there's not a lot of people trading right now.
There was nobody on the subway platform this morning. Nobody.
Yeah.
The telltale sign.
Yeah.
All right, well, a lot of big moves here across the market space. Of course, a big week for yields, a big week for the dollar, and of course, a big week for stocks, too. Not quite how I think a lot of people thought this week would shape up, but this is what you have. 5 straight days of gains, 7 straight sessions, really going back to last week. And that continues today. 100 points higher on the Dow Jones Industrial Average, or about 0.2%. A similar percentage gain for the S&P 500, as well as the NASDAQ Composite. And the Russell 2000 is going to finish the day higher by about 6 points, or 0.3%. All the major indices higher on a weekly basis.
All right, back to the S&P 500 I go, and 319 names, guys, in the index posting gains in today's session. 180, Scarlett, to the downside, 4 unchanged.
All right, let's take a look at how the sector performances shake out because on the face of it, it is a mixed day with modest advances in the S&P 500, in the Dow and the NASDAQ as well. So if we could pull that up, we've been having a little bit of problems. It's been on a bit of a delay.
On technical day.
Okay, we don't have that right now. But you know what? If I look at the most active stocks by value, it's pretty clear that you've got a bunch of big tech names gaining. NVIDIA among them up 1.4%, for instance.
Yeah, I think who's ever in control of that went up to get ice cream upstairs, which is what we put out on Friday, which is really fair, right? Because we're coming to the end of the summer. Having said that...
You put out ice cream?
Occasionally. You never had ice cream?
Never in my life.
That's really sad. All right.
Like Jack LaLanne.
All right.
Oh, my God.
All right. On that, let's get to some of the individual gainers. Ulta Beauty, guys, up another 3% in today's session after an 11% gain yesterday. Of course, we know the news yesterday. Warren Buffett's Berkshire Hathaway disclosing it took a new stake in Ulta, according to the 13F filing. Stock's still down more than 20% year to date, but nonetheless, a gainer in today's session. Fubo, did I mess up? Can I go back to that? Did you guys do that? Yes. Thank you so much. Fubo TV. Some news, of course. That one just up about, 16% here. Big bump to the upside. Fox, Warner Brothers Discovery, Walt Disney blocked by a judge from launching their streaming service just 1 week before it was supposed to be rolled out. A blow for them, but a gain for Fubo TV. So that one really a pop to the upside.
What does Fubo stand for?
Fubo? Yeah. Fubo? I don't know. No. Do you all know?
No.
Come on. Really? No?
I'm going to research it, so you keep going and I'll research.
Okay, you do that. All right, Dexcom, a top gainer in the S&P 500 and the NASDAQ. It's a medical equipment company, guys. It was up about 3% today. Makes glucose monitoring systems. I'm not really quite sure why it's rallying, but nonetheless, it was an outperformer in today's session. There's been some concerns, I think, about some disappointing earnings they had back in July, but an investigation maybe a little bit into potential violations of federal securities laws. I just don't understand why it's rallying, but it is. So I thought I'd put it out there. All right.
You know what, Carol, since I'm also wearing red today, I'll take the decliners here. Going to start off with Applied Materials. It actually came off of the lows that we did see earlier, but down close to 2% today. It's worst day since August 7th. But what happened here, if you're looking at the semiconductor capital equipment company did give a fourth quarter forecast that was in line with expectations, but unfortunately it did disappoint bullish investors who were looking for a bigger payoff when it does come none other than AI spending. Another one I'm looking at, and this is one of the top decliners here in the S&P 500, Amcor here down almost 4%, so worst day since May 3rd of 2023 here. This is a global packaging company, and it did slide after sales slowed in the latest quarter here, so it did see sales declines in both rigid and flexible segments. And want to also end on Palo Alto because we're going to get an earnings update from them at the start of next week, down about 2.7%, worst day since August 5th here, but keeping a close eye on what that guidance could be for fiscal 2025 when it does report on Monday, guys.
All right, I don't know what FUBO actually means, but I think if we go with football and then condense it, I think that's a pretty good bet. But we can still work on that. Taking a look at the bond market, we saw buying all across the curve. We have yields down by about 4 basis points on the front end. But what I found so interesting as we talk about weekly moves, the 2-year yield on a weekly basis currently unchanged. So talk about that round trip. Nothing says that more clearly than the 2-year yields.
Yeah, and it's kind of interesting too. I mean, we talk about all the movements in yields, and look, I mean, we're now firmly below that 4% mark on the 10-year, and it looks like a lot of the big bets, at least if you look at that CFTC data, guys, that just came out, most people think that the trajectory is going to continue down in rates here as that Treasury buying will resume.
It's amazing. I Googled FUBO. There's nothing, right?
I told you.
It's the name of a sports network that I would name after myself. FUBO.
I like
right?
that.
If I had my own sports network.
Oh, now I get what you wrote. Now that makes more sense. I still think it's a condensed football, but go ahead.
All right, let's get to some of the stories that caught our attention. Listen, we've been talking about the weaker housing data, right? And just kind of watching that sector and what it means potentially. One story that caught our attention, if you talk about the high end of real estate, ultra luxury home sales apparently are on the rise. We're talking about $100,000 or above, on pace to set a new record, Jet.
That's right. If you're looking at the pool of potential buyers, it's still small. Top-tier billionaires have watched their wealth swell over the last few years, but of course we do have that Bloomberg Billionaires Dollar Index here that you can look in the terminal, but now there are even more homes for them, so it's an interesting read here on the terminal.
It's like Romaine's home.
These are not homes. These are compounds.
Have you noticed we've never been invited? So I'm guessing,
You know, the Sweeney compound. Totally. Alex knows. He always talks about this on Bloomberg Intelligence Radio.
Oh, yeah. The Sweeney compound?
That's right.
Yeah. It's huge. It's huge. I think he sold that, though.
I like
never invites us,
the word compound, though. It makes clear that there's more than one building. And within some of those buildings are, I'm sure, a lot of art, pieces of art, and what's really interesting is that a lot of people are now borrowing against that art. They're using that as collateral to get some liquidity, and a lot of the banks, Bank of America, for instance, Citi, they're all like building out their art department to be able to provide that service.
I'm actually surprised that this hasn't happened more. Like, this makes perfect sense to me. Like, why wouldn't you do that? Like, you don't want to liquidate it, so why don't just get a loan against it?
Yeah, we've seen this happen in the past here. I mean, like, what kind of art are they taking? Like, can I get some of my old NFTs and leverage that? Or
I mean, maybe, to be honest.
It's the old masters kind of art for me.
Yeah.
So,
no paint by number, okay?
But why couldn't you do NFTs? I mean, like, why couldn't at some point that be a thing?
Because they're not worth anything anymore. I am curious. I love this story for a couple reasons, too, because it gets to this idea of kind of all the levers that people of means have to pull to kind of keep spending, or at least to continue their lifestyle here in a way that people on the lower end of the spectrum don't. And not to get all serious about it, but it gets back into that conversation about a K-shaped economic recovery and why we have it.
It was something we talked about here yesterday on air about, the wealth gap that continues to, be in our society. And a lot of it starts with just basic things like being able to buy a house, and then that helps create, you get to leverage it and so on and so forth. And you're right, Romaine, the wealthy have a lot of different levers to do this with.
That's right. And Carol and I had a segment earlier talking about housing specifically and what they're seeing in that particular segment, but they called it kind of the Southern Smile. We're obviously probably not surprisingly cheaper to live down there than where we are here on the East Coast.
Can you imagine what kind of loan you can get out on a Stegosaurus?
Someone has to assess the value of that before they actually lend you money. So the other thing, Romaine, you were saying that...
So what does that mean? Somebody has to come by and touch it or something?
Exactly. The wealthy have a lot of levers to pull. They also don't have liquidity the same way that I think people of lower incomes do, right? Because all their wealth is tied up in actual assets. Yeah. So when they do have to, come up with money, yes, they can do it, but they'd have to sell, and you don't necessarily want to be forced to sell anything.
Cash poor.
But you know what's helped? You know what helps? Not paying taxes on the loans. So it's like, that's the whole point, right? Like, if you're just going to do all these loans against the stuff you already own, you're not getting taxed on that.
Can we go get ice cream?
I just killed the chat talking about taxes.
I know, we're like, wah, wah.
Wah, wah, wah. Thanks very much, Alex.
Everyone's shoulders just slumped.
All right, guys. Have a great weekend, a safe weekend, and we'll see you all next week. All right. Alex is heading out. Scarlett and Romaine continuing on TV, and Jess and I are going to continue here on Business Week. Have a good and safe weekend. We'll see you all next week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everyone. You are listening and watching Bloomberg Business Week. Carol Master along with Jess Metten here in our Bloomberg Interactive Broker studio. So among our most read stories on the Bloomberg is one about the Florida investor and individual who cashed in on the meme stock craze and now is JetBlue's third biggest shareholder. It's kind of what I call a wait what moment. So let's get to it. This individual, not a household name, just a guy trying to make a buck. And now he's tracking the likes of the well-known activist investor Carl Icahn. Those are the words of our next two guests. For the who, what, where, and why, let's get to Bloomberg News U.S. Airlines reporter in our Dallas bureau. We are talking about Mary Schlangenstein. And also with us is Crystal C. She's our deals reporter at Bloomberg News. She's also joining us remotely. Hey, guys. Great story, as we said, among the most read on the Bloomberg. Mary, who is this man who is now JetBlue's third biggest shareholder?
Well, he's a native of Moscow. Came over from Russia when he was 15 years old with his mother and his sister. And he started selling computers and built some computer-related companies. Now he owns a big firm called HubX. He's the co-founder of HubX, which is kind of an electronics B2B marketing place that's online and it's global. And so he's made money there, but he's also made money off of GameStop. He had a big investment in GameStop where he made a lot of money, and he's used some of those proceeds to invest in JetBlue.
And Crystal, I want to bring you into this conversation as well. And so come in here and talk to us about Vladimir Galkin and what you know about him specifically.
Yeah, like Mary said, we know that he had a background in computers. Doesn't seem like he has operated an airline before. But what we know so far is that he has this very significant stake in JetBlue. Right now, it's showing more than 8%, and Carl Icahn has a 9.9% economic interest. So if you think about it, Icahn is a multi-billionaire. He has like 18 billion in net worth, and this little known guy is here. What we know, what is really interesting is he said he has had the fortune to follow some of the activist investors, just looking at what they do publicly and being able to just follow them and get into the stock as well. Not only is Carl Icahn one of the people he kind of like looked up to, the other one is Brian Cohen. When Marion mentioned GameStop, the really interesting thing is that he was actually the condo neighbor with Ryan Cohen at one point, and saw him on TV talking about GameStop, and that's how he got the idea that he should get into GameStop as well. So I think it's just a really fascinating story about maybe like Florida, actually. Maybe it's like a Miami story, like Florida man gets into JetBlue.
It is really fascinating. Mary, so what does it make Galkin, and what are his aspirations? Does he consider himself an activist investor? Does he want to own JetBlue? Like, what is he looking to do? Does he want a board seat? What does he want?
Well, he's met with the president of JetBlue and with JetBlue's CFO and said he discussed the company with them. He hasn't asked for a board seat yet. He didn't say that he would ask for one. He said he hopes to get his stake up to about 9.9% in JetBlue. He had some suggestions for the board that, like that they should own more of the company, be more invested in the company themselves. And the only other thing he's apparently asked for so far was an upgrade in his frequent flyer status to the premium category, and he got that.
Well, it's funny too that I wonder, what his ambitions are. I love this quote in the story. Although he's never discussed JetBlue with Icahn, Galkin says, "I've had good fortune following activist investors before. They really work out great." I mean, so there's been no conversation, Crystal, between Carl Icahn and Vladimir Galkin.
Yeah, that's what our reporting had told us, that he hasn't talked to Icahn or the Icahn representative on the JetBlue board about his investment. Like Mary said, he's spoken to some of the JetBlue management team. He hasn't asked for a board seat. So I would categorize him as not so much of an activist investor. Activist investors usually come in with a set of demands. Like they want the company to do these amount of things. And eventual goal is to obviously get some returns, pop the stock price. And I'm sure he has the ultimate aspiration here for capital gains, but it's not really the same playbook that we've seen with some of these activist titans like the Icon of the world.
Mary, I'm looking at JetBlue shares. They're down almost 15% year to date. This is one that has definitely struggled since the pandemic. You know, is it likely that something dramatic is going to happen at this airline?
Well, they're trying to turn things around at the airline. If you remember, they had a lucrative partnership with American Airlines in the Northeast that got shut down by a federal court, and then their planned acquisition of Spirit Airlines, excuse me, also got shut down by a federal court. And so their current CEO, Joanna Garrity, who came in February, she's trying to turn the airline around. She's brought back some former executives, and she said, hey, we're pulling back to kind of our roots, you know, where we started, where we were first successful. And they've delayed $3 billion worth of aircraft CapEx until beyond 2030. So they're really trying to get their house back in order to where they can start making some profits and see their shares go back up.
I mean, how are you guys thinking about this individual? It's really fascinating. You know, so often he's not a household name, but he's dealing in a world where it's certainly a well-known company. When we think about Carl Icahn and pull this in, I mean, Crystal, how are you thinking about this as you guys reported this out?
Yeah, I found it fascinating. I think Mary and I had great fun reporting on the story, especially just contrasting him, like you said, to some of these very well-known titans because they tend to have a very established playbook. I think my gut tells me that when you have that big of a stake in any given company, you want to exert some sort of influence, even though he may not have asked for a board seat. It wouldn't be surprising that, you know, JetBlue will take his words more seriously given his stake. He pointed out that other than, if you look at the board, if you strip out the two Icon representatives, the board combined owns about 1.4% of the JetBlue share. So he's there making a point that more ownership makes him more aligned with the rest of the shareholders. So therefore, whatever he says should matter more. So yeah, anything could happen. Depends on what he asks for next.
Mary, I mean, how are you thinking about him, right? Like, this is somebody who, you know, probably wouldn't have popped up on anybody's radar, your radar, if it wasn't for his positioning here. I mean, I am curious, too. Is he a long-term shareholder, or is he, you know, could he, if he starts to see the stock pop up, does he get out? Like, what do we know?
Well, he did tell us that he plans to stay in the stock for at least 12 to 24 months. And then I guess he'll reevaluate where they're at that time and decide what he wants to do. But he didn't sound like he was in any, you know, big hurry to get out of the stock. He, in fact, added to his position as late as the early part of this week. He was still adding shares. So I think as long as the stock remains depressed, he may invest more if he believes it's going to turn around and start to rise.
Do we know anything else that he owns? I mean, he really seems to be very an eclectic investor.
Yeah, he didn't really talk about his other holdings. We know he holds some other investments, but he didn't talk about those. He didn't want to talk about his net worth or how much he invested in GameStop or how much he made in GameStop. So he's holding back some of the information that he doesn't quite want to make public.
Really cool stuff. Hey, Crystal, come on back in here. So where do we know where Carl Icahn is on all of this in terms of JetBlue specifically?
So JetBlue, his representative has gained 2 seats in February, and there is at least a 1-year term. So he will be on the board. His representative will be on the board until at least next year. He's kind of capped out in his holding at 9.9%. Anything over that, with such a highly regulated industry, will require regulatory approval to get any more. I'm sure that they're working behind the scene with the company, but because there's a standstill agreement between the company and the Icon representatives, we haven't really heard much from them. But it will be interesting if they stand for re-election next year, or whether the company put them up for re-election next year, or will they agitate again and say that a couple of the things, you know, they've done a financing deal. Are they happy with that? Once that standstill expires, we'll definitely hear more from the Icon group.
Hey, Mary, save 30 seconds for you. In terms of JetBlue, I mean, we just got through an earnings season, so we won't hear from them, at least on a quarterly basis, until the end of October. But what's on your radar when it comes to JetBlue specifically?
Well, they did just do a big financing deal this week when they
Right.
raised money in part using their True Blue loyalty program as collateral. And I think what everybody's looking for is whether Joanna Garrity is going to be able to be successful. You know, is she going to be able to get this company turned around? They've had cost problems forever and have never seemed to really be able to successfully tackle their costs. So
Yeah.
I think that's what everybody's looking for is Joanna going to be the one that's able to do it this time?
Well, everybody's going to be watching. Hey, guys, thank you so much. Really fun story. And as we said, among the most read on the Bloomberg News, U.S. Airlines reporter, of course, Mary Schlangenstein, and Bloomberg News deals reporter Crystal C. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. What a week for the S&P 500 index. What a week to find as a gain of 3.9%. The best week for the U.S. stock market this year. A flurry of data showing U.S. economic resilience drove stocks to their best week. Dip buyers stepping in after that recent rout. S&P today up 11, ending at 55.54. A gain today of 0.2%. The Dow up 96, up 0.2%. NASDAQ up 37, a gain of 0.2%. The 10-year 3.88%, the 2-year 4.05%. Gold 25.08. We're looking at a record on the precious metal, up today by 2.1%, and a retreat for West Texas Intermediate crude, 76.74 a barrel. WTI down today by 1.8%. Cannot ignore the move in Bitcoin today, up by almost 5%, 59,447 now on Bitcoin. Fox, Warner Brothers Discovery, and Disney have been blocked by a Manhattan federal judge from launching their streaming sports service 1 week before its rollout, taking a blow from their smaller rival, Fubo TV. Shares of Fubo today surged 16.8%, Fox up 1.3%, Disney up by 0.6%, Warner Brothers Discovery up by 2.4%. Again, recapping here, the Dow, the S&P, NASDAQ all higher, S&P up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the world of entertainment and content back on our radar today. This has a bidding war for Paramount Global, maybe in the making, as Seagram heir Edgar Bronfman Jr. is said to be close to making an offer for Paramount Global, setting off that bidding war for the film and TV company that owns CBS and MTV. This is according to a Bloomberg exclusive. You can read all the deals. Just head to Bloomberg.com or check it out on the Bloomberg terminal. Well, our next guest is definitely in the content and entertainment space. Let's get to Bill O'Dowd. He is the CEO of the microcap $16 million market cap company. It's an entertainment, marketing, and content production company, and it is known as Dolphin Entertainment. He joins us from Miami. Bill, good to be talking with you. How are you?
I'm very good. Thank you, Carol. Thank you for having me on.
Well, it's great to have you here. Let's start with kind of the nuts and bolts, if we may. Just reported earnings this week. Your release said record second quarter revenue. Remind our world, the Bloomberg world, the investing world, about what your company does and the latest update and the outlook for your business.
Sure. Well, thank you for that. Well, we do three things all in one. We started as a production company, film and TV producers, and we still do that, having just released The Blue Angels with IMAX this spring. Then we started assembling a best-in-class PR and marketing special events, influencer marketing companies around entertainment. And then we started investing in things that we could market, like consumer products. So we're very excited for that.
All right, so talk to us about the quarter and the business. Look back, look forward in terms of, we mentioned the headline in terms of second quarter revenue, specifically in terms of a record. That's according to you guys. Talk to us about a little bit of the business and where the growth is coming from, because you mentioned like kind of these three areas. So where's the growth been? Where's it going?
Sure. Yeah, well, we've been blessed with a lot of organic growth. The companies work together. Create synergy between, creating campaigns for motion pictures or consumer products that may want both PR and influencer marketing, as an example, or event marketing with influencer, let's say. And in addition, we're going back into production. The Blue Angels was a big hit for us in partnership with IMAX, and that was certainly part of the revenue increase as well.
Well, it's interesting. Well, and that IMAX partnership, how much more can you leverage out of it, right? Like, this is something, it sounds like, that's got some legs, and I'm curious where you take it.
Sure. Yeah, thank you. It's a multi-year partnership. We're used to doing that with Dolphin. We were partners with Nickelodeon for years and years in making children's content, and have had 50-50 partnerships in the past with Warner's or others. So we hope to be doing documentaries with IMAX for years to come. It's certainly a great partner to do documentaries with, because you can do these big spectacle documentaries, docbusters as we call them, that really deserve to be seen on the big screen, like The Blue Angels.
Yeah, and we, the press release that you guys put out, it talked about, debuting as #1 on Prime Video over the Memorial Day holiday. It grossed over $2 million at the box office, IMAX, and that included a top 10 debut with about $1.4 million in its opening weekend. What did you call it, Docbusters?
That's right. Yeah.
So where else do you go with? Like, do you just continue to do more of that? And how expensive is it to do and build out that content?
Well, documentaries are less expensive than the bigger features, of course. So they typically range in the $3 to $5 million range, let's say, for a theatrical. Obviously, you can make them for less or more. And we do think there's an opening to do 1 or 2 of those a year. They certainly program well. There are gaps in the year where there wouldn't be studio content available or fresh studio content to put into IMAX. And also, we think our partnership is expanding into live streaming as well. You know, we could do music specials, Broadway specials, comedy specials, you know, one night only type things that would really juice, we hope, the box office, especially midweek.
When do you start to do something like that, or what's involved in getting into that area more aggressively?
We hope to launch that in the first quarter of next year, and IMAX has already been doing some of that themselves, and it's a natural extension of our partnership to go into that content together.
What's the challenge in all of this? Because I do feel like, you know, Bill, I think it's safe to say, we cover this a lot at Bloomberg, that, I mean, there's a lot of places to view content. There's a lot of content creators, but there's a lot of people vying for that content. So what's the stuff that really you think moves the needle in terms of engaging with the consumer? Because I know I get to a point where I'm just overwhelmed and I'm done and I pick up a book and read. But I just wonder, right, you've got to kind of read through a lot of stuff.
You sure do, and I like reading too, so I understand completely. And I think a lot of people try and, you know, thread the needle by thinking about what would work best in which type of delivery. You know, when you talk something like an IMAX system, then and network, then you want that spectacle, something that warrants people coming out and spending the money. You know, on the smaller screen and the streaming wars, you're seeing a lot of people look for different types of content. And if you think about the last 10 years, the rise of documentaries or true crime, especially on the small screen, has really exploded.
What about, you mentioned live sports, Broadway comedy, or you mentioned Broadway comedy. What about sports in terms of live streaming? Or is that just too expensive, already crowded? The big boys, the big guys are in it.
I think certainly sporting events, it's probably crowded. And those rights only seem to be going up and up, right?
Yeah.
But we do like sports content generally quite a bit. And you're seeing a lot of opportunity this year around women's sports. And that's an area that we really like. We think female athletes have been underserved tremendously. And with our influencer marketing companies, we think we could expand and bring brand sponsorship deals and just generally income to female athletes from speaking engagements, et cetera.
You mentioned the influencers, and I thought that was really interesting. I know you've got a relationship with Glow Lab. You are thinking about the younger audience. I mean, first of all, couple things. What is your target audience, or you don't care? You want to go all over the kind of age spectrum?
I think with influencer, you can broaden out. We started with the core, which, you know, female 25 to 44, let's say, beauty, wellness, fashion products. But the thing about influencer marketing, it's grown double digits year over year. Some years, I think, triple digits, simply because there is no one demo anymore.
Yeah.
And the marriage of influencer with sports is. It was going to come anyway, but it certainly accelerated 3 years ago with the Supreme Court ruling, you know, name, image, likeness for college athletes. And now this generation are influencers, this generation of athletes, right? You could just see Simone Biles taking selfies at the Olympics or get ready with me videos at the Olympics. And you know that if you're talking athletes 15 to 25, they're digital natives for sure.
Well, when you think about the work with influencers, as you said, I mean, you also want to be, creating the products that they're involved in? Or talk to us about how you kind of drill down into that relationship, which I would assume then opens up even another revenue stream for you guys.
It sure does. Thank you. Yeah, it's really marrying a couple of different aspects of our business. You know, we financed and produced television and film for 20 years prior to going public. We're used to project finance. And then when you marry that with the rise of social media and influencer marketing, then it's really just applying project finance to consumer product. I mean, we could develop and bring to market consumer products where our form of marketing, especially in entertainment, will give us a better chance of success. So when you think about beauty, cosmetics, as an example, those are products where influencers and celebrities have long influenced success. And so we think there are certain product categories like alcohol where the marketing of the product is as important as the manufacturing and the distribution itself.
But it'd be great if you get a piece of both, right? Going forward?
That's right. That's right.
Hang on for a second. We're going to take a break, do a little bit of world and national news, but we'll come back and continue the conversation. We're talking with Bill O'Dowd, founder and chief executive officer of Dolphin Entertainment, joining us from Miami. As we head to a break, we've got stocks seeing their best week so far here in 2024. A flurry of data showing U.S. economic resilience, driving stocks to their best week this year. Some dip buyers stepping in after a recent rout. Keep in mind, volume very, very light here. But we did see the S&P 500 extending a 7-day rally to 6.8%. And that is the best performance in such a span since October of 2022, so in some time. All right, let's get a check on world and national news. For that, we head back to D.C. and Amy Morris. Amy, all yours.
All right, thank you, Carol. Vice President Kamala Harris laid out her economic agenda during a campaign stop in North Carolina. The plan includes sweeping new federal subsidies for parents, home buyers, and Americans with low incomes. And she says she recognizes some people still feel left behind.
We know that many Americans don't yet feel that progress in their daily lives. Costs are still too high. And on a deeper level, for too many people, no matter how much they work, it feels so hard to just be able to get ahead.
Harris's plan is dubbed the opportunity economy. Security is already tied ahead of the Democratic National Convention next week in Chicago. Bloomberg's Nathan Hager explains from Washington.
Accenture Tower is nearly 2 miles away from the convention site at the United Center, but it will look like a fortress by the time the event gets underway. The tower is home to Chicago's Israeli consulate, and pro-Palestinian groups are planning a mass demonstration outside to, quote, shut down the DNC for Gaza. The Windy City has vivid memories of Vietnam protests during the 1968 DNC and the riots in 2020 following George Floyd's murder. Chicago Police Superintendent Larry Snelling says he will not let people come in and destroy his city. In Washington, I'm Nathan Hager, Bloomberg Radio.
Mediators to the Gaza war ceasefire talks say the two-day talks have wrapped up, and they aim to reconvene in Cairo next week to seal a deal to stop the fighting. President Biden spoke to the progress being made.
We are closer than we've ever been. I don't want to jinx anything, but as my grandfather would say, with the grace of God, good little neighbors, a lot of luck. We may have something, but we're not there yet. But it's much, much closer than it was 3 days ago.
President Biden speaking from the Oval Office. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A flurry of data showing U.S. economic resilience drove stocks to their best week this year. Dip buyers stepped in today after that recent rout. Equities extended their advance into a seventh straight session. Now, on the week, we had the S&P up by 3.9%. Today, the S&P up 11, finishing the week, heading into the weekend at 55.54, up today by 0.2%. Dow Industrials up 96, up 0.2%. NASDAQ Composite also up 0.2%. We had the Russell 2000 index advancing by 0.3%. 10-year, 3.87%. The 2-year, 4.04%. Gold up $51 at $25.08. We're looking at a record on gold, up 2.1%, while West Texas Intermediate crude down 1.8%, $76.72 for a barrel of WTI. I mentioned the advance today in small cap shares with the Russell 2000 up 0.3%. Mike Rohde is Senior Investment Director at American Century Investments, and here on Bloomberg Business Week, he talked about the outlook for small caps.
If you look at the data points this week, they've been much better, more thought about a soft landing. And in that scenario, I think small caps are actually looking really attractive just given current valuation. They are dramatically underowned by institutional and retail investors.
Mike Rohde of American Century Investments, interviewed right here on Bloomberg Business Week. So again, recapping an advance today for stocks. Bayer shares rallied 8.5% following a significant win for the German company in the long-running cancer litigation over its Roundup weed killer. Again, Bayer today, ADR is up by 8.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Yes, indeed it is. All right, Charlie, thank you so much. I want to get back to our guest. We are talking with Bill O'Dowd. He's the CEO of the microcap company we mentioned earlier, about a $16 million market cap, publicly held company, entertainment marketing and content production company. It is known as Dolphin Entertainment, and Bill is still with us on the phone in Miami. Hey, Bill, one thing I did want to ask you when we were talking a little bit of nuts and bolts in terms of the quarter, you are a microcap company. We don't, on Bloomberg, talk a lot to companies that are below a buck. And I am curious what you get from investors. Stock's down about 60% year to date. What do you hear from your investors, and what are your aspirations? Is there something about, I understand sometimes we start small, we get bigger. What are your aspirations for this company? And what do you hear from your investors?
Sure. Yeah, no. Well, the microcap environment as a whole, as I'm sure you know, Carol, has had a tough year.
Yep.
We've posted record quarterly revenue 3 quarters in a row, so and positive adjusted operating income. So we're hopeful and confident that we'll be rewarded in the market, especially as a microcap, doing real revenue with real business.
So is it just investors saying, listen, we get it, it's the environment, or what do they want to know about your business in particular? What are the questions you get most from investors?
Yeah, I'd say it's mostly about the environment. Numbers don't lie in terms of what we're doing in revenue and adjusted operating income, and we're beating our own projections, including the analyst projections out there. So there's a sense of frustration with some that they just wish that we weren't being lumped in with some of the others, but we just have to stay the course. I mean, a microcap that's doing $50 million in revenue and a $16 million market cap, you'd like to believe that you're about to pop back.
When you look at the environment, and I think it's, Bill, it's an interesting one. We're very focused on, what's going on in terms of Fed policy, what's going on in terms of economic data. We talked a lot by the end of the week about a soft landing, and it looks like things are, kind of working out fairly well. Not all Americans certainly feel that. We talk a lot about the differences between the top and the bottom in terms of the economic strata. Having said that, when you look at the environment, you're doing deals, you're doing different things. How do you describe the U.S. economy right now?
Well, we're hopeful for the rate cuts. Just I think, like a lot of people, will free up cash and discretionary investment into the microcap world, small cap world generally, right? Mm-hmm. I think you hear a lot of people talk about that. We're not as susceptible to some other companies in terms of the interest rates. We've fixed ours in commercial paper already, so we feel good about our position. But certainly lower interest rates, or lower Fed rates, would certainly benefit the microcap world for sure.
All right. Yeah. No, we talked about that actually earlier in terms of small caps and the importance of economic growth as well as in terms of the interest rate environment. Bigger, broader picture. We've spent a lot of time talking about kind of what happens to some of the big media players. We talk about streaming so much. You are in the content business. What do you make of all of what's going on in the streaming world? It's a lot of competition for all of our eyeballs, and there are obviously some very clear winners and some that are having a tougher time.
Yeah, and we're blessed where our film and television PR firm, 42 West, works with almost every major streamer out there, and we promote shows on so many different platforms, from Netflix to Amazon to Hulu and Paramount Plus, et cetera. So we see a lot of them contracting some in terms of investment, as I'm sure you've talked about quite a bit. But the sheer volume of programming the last few years has been overwhelming to a lot of consumers, I think, and probably this is for the best.
And so you don't care kind of who wins because you get to work with them all, right? Is that fair to say? But I wonder, do you think that there will be, because you do see some that might be struggling or slowing down a little bit, that there'll be some kind of shakeout?
There has to be. One would think, and certainly the conversations out there about M&A among some of even the bigger studios, right, isn't idle speculation. So there'll be a right sizing of the ship, I think, and the industry hopefully will be stronger for it.
So what's kind of interesting when you look at the content and media world and you look out, we talked a little bit earlier about influencers and your work with Glow Lab, and it is interesting in a week where, again, Warren Buffett, we saw his stake in Ulta Beauty. We talked about it through the pandemic and out of the pandemic, that whether it was Sephora or some of the other names, that, people spend. It's not just cosmetics, it's all kinds of beauty and, skincare and so on and so forth, that spending kind of continues. You guys also work with Rachel Ray, so chefs are something that's certainly on your radar. When you think about growth areas for content, if you had to whittle it down to one thing, what would it be? There's also AI, right? So the creation of whatever that content will be.
Yeah, and AI is unstoppable, right?
Yeah.
We take a positive spin on it, certainly. But, I think when you take a step back and you think the world before and after the rise of social media, you can make a case that what it's done through the explosion of what used to be, remember when it was mommy bloggers and then it became influencers and now it's creators, you could make an argument that's democratized the ability to launch certain types of consumer products. Early in my career, you would need, tens of millions of dollars of paid media to just get awareness of the U.S. consumer. Today, you've got influencers launching their own skincare products and selling the companies 3 years later for over $300 million, as Susan Yara and Glow Lab did with Naturium to e.l.f. Beauty. So, that's unfathomable, 15 years ago, 10 years ago. So we see a lot of potential using influencer marketing and PR, earned media generally, to launch and content on those channels to be able to drive traffic. That's on the consumer product side. Of course, on the pure content side, I think it raised a lot of eyebrows in the last week or two, that on television sets, YouTube gets more viewing than Netflix. And I think that raised a lot of awareness, outside of our world, just how big social media is to all demographics and not just, the YA.
Listen, right now, you are on YouTube. We don't get to see your face right now. You're on the phone, but if you were on Zoom and so on and so forth, I mean, right now, simulcast on radio, we're on YouTube, and we're on our streaming service. And then earlier, we're also on television. So it's just interesting, like the different venues. I watch a lot of YouTube channels. There's some interesting stuff, very niche programming. If you had to pick one, whether YouTube, TikTok, or some kind of delivery service that you think is really going to be or continue to be the most influential, and just got about 20 seconds, what would it be?
YouTube.
Hands down. Hands down.
Hands down. It can do both short and long form, and it's already got the mass.
All right, great stuff, as always. Listen, thank you so much. Have a great weekend. Enjoyed doing this deep dive with you. Bill O'Dowd, he's founder and chief executive officer of Dolphin Entertainment, joining us on this Friday in Miami. All right, everybody, we're getting ready to wrap up the day here on Bloomberg Business Week. Stick around, too, a reason to check us out on the weekend. That's coming your way in just a moment. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Fox, Warner Brothers Discovery, and Disney have been blocked by a judge from launching their streaming sports service a week before its rollout, taking a blow from their smaller rival, Fubo TV. That ruling today from a federal judge in Manhattan. Fubo surged 16.8%, Fox up 1.4%, Disney up 0.6%, Warner Brothers Discovery today up by about 2.4%. MasterCard cutting 3% of staff worldwide, according to a spokesperson for the payments network. That would work out to about 1,000 people based on its reported employee count at the end of last year. MasterCard today a little changed, up less than 0.1%. Texas Instruments is set to receive $1.6 billion in CHIPS Act grants and $3 billion in loans. That word today from the Biden administration. Applied Materials delivered an inline sales forecast that disappointed investors. Applied Materials down 1.9%. Ian King covers semiconductors for Bloomberg News in Silicon Valley.
There are two things going on here. Anything that's to do with high-end logic, which is for data centers and by extension AI, is doing really well. There's a lot of demand for that. On the flip side, some of the types of chips that, say, are for automakers or for industrial equipment, there's not a lot of strong demand growth there at the moment, so perhaps machinery orders for that particular sector were a little bit weaker.
Bloomberg's Ian King, again, shares down 1.9%. Bryant Riley, the co-founder and largest shareholder of B. Riley Financial, informally offered to buy the shares of the embattled investment firm he doesn't already own. B. Riley today up by 16.1%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up here on Business Week. Before we do so, though, let's get an update on world and national news. Back to D.C. we go, and Amy Morris. Amy.
All right, thank you, Carol. Vice President Kamala Harris today announcing her economic plans, calling it an opportunity economy.
Everyone, regardless of who they are or where they start, has an opportunity to build wealth for themselves and their children. And where we remove the barriers to opportunity, so anyone who wants to start a business or advance their career can access the tools and the resources that are necessary to do so.
She says key to developing an opportunity economy is building up the middle class. Now, the election may not be decided yet, of course, but former President Trump is already looking ahead to his transition. Bloomberg's Nathan Hager reports from Washington.
Trump has named billionaire Cantor Fitzgerald CEO Howard Lutnick and World Wrestling Entertainment co-founder Linda McMahon co-chairs of his transition. Vice presidential nominee J.D. Vance and Trump's sons, Don Jr. and Eric, will be honorary co-chairs. The former president has a history of chaotic transitions. He fired former New Jersey Governor Chris Christie days after winning the 2016 election. And the Biden transition says Trump's staff didn't cooperate with them in 2020, as the former president insisted he won that election. In Washington, I'm Nathan Hager, Bloomberg Radio.
With Middle East tensions heightened following an Israeli attack in Iran, former National Security Advisor John Bolton says the foreign policy of a second Trump administration is still not clear.
He has no idea what it will look like. The attraction to Donald Trump of making a deal with anybody is hard to quantify. It really goes off the charts. And it could be the same way in a second term. And that's why I think there's a certain amount of pressure on the Israelis if they're going to do something to do it now rather than to wait for the uncertainty of the American election.
Former ambassador to the UN, John Bolton, speaking on Bloomberg Surveillance. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week now with Carol Masser and Jess Menton.
Amy, have a great weekend. Thank you so much. Well, Bloomberg Business Week on the weekend. Do not forget, Saturday, tomorrow on Bloomberg Radio at 8 a.m. Wall Street time. Also on our podcast feed. You can catch that at Bloomberg.com or wherever you download your podcasts. Among our interviews, one on an individual that has worn a few hats. He's well known. He's behind one of the largest market cap companies out there. We're talking about Bill Gates. Here's some of our conversation with Anuprita Das. She's South Asia correspondent for the New York Times. Her new book out, Billionaire, Nerd, Savior, King, Bill Gates and his quest to shape our world. Gates' relationship with another billionaire, Warren Buffett. Here's a little bit of what she had to say about that.
Warren spoke on the record. You know, he is, in fact, you know, I used to cover, again, a lot of this goes back to the Journal when I was a reporter. You know, I used to write about Warren Buffett and Berkshire Hathaway. So the relationship of the two men was also equally interesting. The first time I saw them at the Berkshire Hathaway meeting, just kind of walking around, you know, talking to shareholders. And it just struck me as kind of a, you know, a very casual but very intimate friendship. And then I began looking at it and seeing that, you know, they've talked about, each has talked about the other and sort of the magic of their friendship over the decades. And, you know, Bill Gates definitely has kind of advertised that piece of it. It's almost like part of his brand every year, nearly every year, on Gates Notes, his blog. He